Hello, Dental Team listeners. This is Kiera, and this is part 2 with me and Morgan Hamon as part of EAG Dentist Advisors, where we're actually going to talk into the tax psychology and the tax strategies and the tax tips. And I really just feel like this episode is so powerful. And as always, thanks for listening, and I'll catch you next time on the Dental Team podcast.
But no, you got to do the stuff, right? So if your accountant tells you, hey, look, take a board meeting, document it properly. There's a proper way to do it. Like, you got to do it. That's how we say it, the proper legal avoidance. If your accountant comes to you and says, look, it's time to be an S corp because the profit is appropriate, you got to follow the instruction. There's a procedure there, and it's going to save a lot of money on self-employment payroll tax if it's done correctly. You got to listen, but you got to engage. There's action items, and so we. Every September, I made a checklist. Again, Navy guy, right? I got a checklist. Log in, do the checklist. I call it our business tax savings maximizer. That's the flashiest, catchiest name I could think of for it. But log in and do it. That's the secret. So, if for those listeners that are waiting for the secret, that's it, right? We gotta capture expenses as business deductions, and there is action items for the doctor. It requires that engagement. And to circle back to what you said earlier, you can't come into the office and just fix it for them. They've got responsibilities and things to do too, and that's the same with tax planning.
Totally. Morgan, I thought that was such a beautiful way. And as you were going through the phases of grief, I'm like, oh yeah, I definitely lived all of those. And I think it does feel like a kick in the gut. I'm like, this is worse than finding out coal in your stocking Christmas morning. It's way worse. It feels awful. And you're in total denial that how is this even real? I live in America. How is this real? I didn't know. And I mean, then you put on your state tax on there. And I'm like, for people who are in California, more than 50% of your income could be going to tax, depending upon your tax bracket. But I think, Morgan, it is one of those things of also seeing, I know people don't want to hear, I'm going to be very unpopular right here, and it's okay. It will you'll be in denial, you'll hate it, and then you'll be like, yeah, that's actually a really good point, because that's how I did it. Taxes are a blessing though. We are so blessed to live in the country we are, to be able to set the pricing that we want, to be able to do the work that we want to do, that I'm like, I don't want to pay more taxes, but I can see me paying taxes as my opportunity to be here and to be a business owner. And I think that's an amazing thing that we do get to have access to. But like you said, shoot, guys, this is where the discipline comes in. This is where the engagement comes in. This is where the ownership comes in. I remember, or I'll send you a picture. My husband and I made this vision board together, because every December I would cry over taxes. And one of my goals, it literally has it's a sign that says tax expert ahead. And I put that on my vision board because I'm sick of this stupid stuff. I'm sick of Morgan telling me I owe this much money when I'm like, how is it even possible? I was like, I'm going to freaking figure this out. And I realized it's actually not that hard of a math equation. It's what is my profit that I get that month? What's my tax bracket? And let me go save that, pay your quarterly tax payments. And then what I love is because I put myself in the highest tax bracket. Some years I'm going to be a little bit higher. Some years I'm going to be a little bit lower. It's going to flush out. But if I'm saving my max amount that I would be having to pay in taxes every single month, I'm it's not that hard. You literally just take it, put it in a savings account. I put it in a high yield, so I'm even making money on it there. What's amazing is at the end of the year, I get my W-2 refund, if you will, because we realize I have oversaved throughout the year. I also put in there buckets, because I realized for me, Morgan, it wasn't just the tax that was hitting me. It was the SEP IRA that I had to pay. It was charitable contributions I was paying. It was end of year bonuses, and all of that. It's not taxes. I think you get hit with all of those at the end of the year. It's you're trying to put these, then you've got your Roth IRA that you're trying to put those in. And it's all these things are money, and it's all accumulating at one time, versus figuring out how much you really are going to pay, breaking it down into buckets, saving for it. And then I love it. My money at the end of the year, whatever I don't pay in taxes, because yeah, it's a big number, whatever you're just going to pay it. That's part of having an amazing, thriving business. But then my slush, because I oversaved, that becomes my refund. That becomes Kiera's money of sweet, what are we going to do on this? Because I've already paid tax. Now I can take that. Now I can go buy the things I want to buy. I can put it in retire. I can put it wherever I want it to go. But I have it to where peace of mind. When I get my, this year, my CPA came to me and was wow, Kiera, you have this. And I was rock on. You're not stressed about it, but that takes discipline. Every month I'm literally hey, how much do we have? Put that profit over in our savings. every quarter you're making those quarterly payments. It is being strategic. It is like, we were on a call the other day with some of our doctors. I'm like, so Kiera, how like thorough are you when you do your meetings at your house? And I'm like, I cross my T's, dot my I's. I don't like this game. Like, I do Airbnb. I look at all my rental comps around me. I save that every year. It's in a folder. All the things are in the calendar with me and the other people. I have an agenda. I send that over to my CPA. I just don't like to play in the game of gray. But I think those are the pieces that help you. And then you just maximize. But Morgan, I don't know. I think I've just learned that's also part of the success tax of being successful. Like,
It is.
This is what it is. And I think that being a business owner, the discipline of saving your money and not spending it all because we think like, I should get this because I'm a high earner. No, like there's still tax games that we play. There's different ways to minimize it, but realizing like I need to be disciplined here. I think if you can be disciplined there, it also stems to your team. It stems to your leadership. It stems to your physical health. It stems to so many other areas in your life that I think like talk about a blessing of taxes that we actually get this benefit.
I agree, and you do have to be.
Even though I hate it, Morgan,
disciplined.
Don't take me wrong. I still hate taxes.
I
Morgan,
know.
tell me the secrets.
I'll share a personal experience and kind of how I view taxes, because I very happily write those checks. I write the same ones as our doctors do. But so back when I got out of the Navy, my family and I, so my parents, my brother, and myself, we all chipped in and bought a real estate company back in 2005. Right, real estate was hopping, and it was all in, all chips on the table. Well, guess what? 2009. Everyone remember what's happened in 2009. So I mean that it was bad. Right, it was horrific. 2009, my tax bill was zero. But do you think I was coming home saying, "Hey, honey, look at this, zero, woohoo! Check this out. I got no tax." No, I'm sitting in a room and looking at the wall, like, how am I going to face my kids, telling them Dad can't keep a roof over their head? How did my life get this screwed up? I paid no income tax. But those are not good times. That's not a period. And so right after that is when my dad and I started HD Accounting Group. But those days were like not my fondest memories, even though I had zero tax liability. Fast forward a bunch of years, I've enjoyed a lot of success, and I write some big checks to the government, and I don't care. My life is so much better. I got kids college paid for, no debt. Like my life is good. And yeah, they are some big checks. I mean, let's face it, they're not my favorite things to write. Nobody likes it, but my life is just exponentially better. So when you're paying tax, you're making good money. It's like, I don't know, maybe boil it down to that.
Which, thank you for sharing, because I think I agree. I don't want to have a year where I'm paying $0 to taxes, because that means when you said zero and I'm like, oh, he had a bad year. That's like a real bad year.
That's
as a business owner, you start to realize like that actually is not a good year.
No.
But I think for that, it's the discipline. And I found for me what's cut the stress out as an employer and as a business owner, not CPA, that's Morgan's world, that's not my world, is when I have the money and I'm disciplined and I save it, because you still have profit afterwards. So it's not like you're not taking anything home every month. You're just being disciplined that money for tax you save, then I have the money. And I'm like, the pain I think comes from not having the money and the fear of where am I going to come up with the six figures when I've already spent it. I think that's more of why people hate taxes. Just like people hate root canals. Well, they don't actually hate the root canal. They hate the pain leading up to it. We hate the pain of not having the money set aside.
Exactly. And let's tie this real specifically to the world you and I serve, our dentists. What really creates a lot of confusion and adds to the emotion is that, look, most of our clients have a practice note, a big one. And they don't always realize, look, when you make your loan payment, that is not a tax deduction, right? When you borrow the money, we deduct everything you're going to buy, but then over time, when you pay that back, you don't get it deducted again. So if your debt service on your practice loan is $100,000 a year, which we see often, you're paying income tax on 100. So if you made $500K and 100 went back to the bank, you're living on 400, but paying tax on 500.
Correct.
And that can be shocking, and that's why you'll hear, and that applies to just both financial accounting and tax, that question of, hey, my accountant said I made this much money. That can't possibly be the case. I just logged into the bank. What are they talking about? It's that debt service. That money's gone, but it's not a deduction. The other thing that makes it any tax planning for dentists challenging is just the volatility in the month-to-month profit. And I think there's a misperception out there. Hey, look, my accountant is keeping my books up to date every month, right? And so if we get to the end of, let's say, the end of September, and we can, hey, September 30th, this is the exact profit. That does not equate to a granular, precise tax calculation, because we have to, all your tax rate is dependent on total annual household income. If there's 4 months in the year that haven't happened yet, we gotta estimate, and it's subject to change. Maybe they were struggling in May, and they said, I'm calling Kiera, fine, I'm going to do it. We're going to get this thing figured out. And so then by November, they're killing it, and everything's up 30, 40%. Well, guess what's also going to be up? Your estimated payments are going to be higher, right? And so it's volatile, and it's not an exact science. So with any tax planning, those quarter estimated payments are trying to keep you in the hunt. And you alluded to that by having your buckets. Just realize there will be a settle up at the end of the year when it all fleshes out, because all we can do is estimate along the way. Try to keep it as close as we can. But I'm with you. I make those payments quarterly. I don't put my head in the sand, because it'll just get bigger.
Well, I'm curious, Morgan. This is like Kiera's nerdy side of me that I don't understand. So help me, and I hope this comes across respectful of the CPA world.
Mm-hmm.
To me, I feel like, why don't CPAs at the end of every month, my profit, what I did that month. So yes, there's the estimated, but why not just give me, like, the only thing I've thought of is maybe my tax bracket could change, but I'm like, why not estimate every month approximately what I need to save for taxes? So I can at least put that away monthly. Help me understand the psychology of tax.
Trust me, we've thought about this every which way, and I'm never done. I tweak our tax planning process every year. So to your point, like, you could look at last year's tax return. So there's two figures to look at. There's your marginal tax rate, which is your whatever bracket, your highest, so the highest is 37. But then there's what's called an effective, and that's just the average, right? If you look at total income, and total tax, what's the average? So you could look at your last year's tax return, and maybe your combined federal and state income tax was, call it 30%. So you could say, whatever my profit is times 0.3 is what I had to put away. So you could do that, but that's inherently going to be inaccurate, because you will not have the same effective tax rate this year unless you have like a carbon copy, and it'll be different. A lot of volatility. The other thing, it's a very equipment heavy industry, as you know, and people do go buy equipment. And so if say an accountant says, look, put whatever your profit is times 0.3, put that away, but then they get in, and maybe they really do. Maybe their practice was plumbed for 8 ops, but they're equipped for 5, and it's time to those other 3. Well, there's some really nice tax deductions there, like dollar for dollar. Well, that's really going to come down, and so that estimate's going to be out the window, like, really quickly. We've had times where I think of this story. So tell stories. We had a client, this was a few years back, where they sent us an invoice. I can't remember what they bought. It was big, right? It was $120,000. They sent an invoice, not an email like, I'm thinking about this. They sent an invoice. So we booked it. 120K deduction, did the tax plan, the works. Well, it comes time to do the tax return, and we're saying, hey, we keep asking for the loan paperwork on this equipment. We don't get it. So finally, hey, look, we really want to get this tax return done. Doc, can you send us that loan paperwork? And he's like, oh, I changed my mind. I didn't buy that. And we're like, oh, let's put 120K of income back on top. You owe, I think it was like 40,000, and they're like, how can this be? I'm like, you send us an invoice. Think how mad you'd be if we hadn't booked it. So, and I just tell that kind of story, like like equipment purchases in Q4, like it's all out the window. at that point.
Mm-hmm.
So it's a very volatile. So to kind of circle all the way back to the beginning, just for some basic tax planning, I knew for me, like federal and effective, it's like 35%,
Right.
and I just plan for that.
Mm-hmm.
And then there's a settle up, and if I owe a bit, it's because we killed it, and I need to actually celebrate that and
Yeah.
not be cranky about it. And if I get some money back, maybe it just didn't end up as good as I thought or whatever. We're accountants. We don't have like CERC machines to write off. I got like a laptop,
Right.
so I mean we're kind of limited on that. So, but so those are some limitations inherent in tax planning for specific for the dental industry, the volatility in month-to-month profit, and the high amount of equipment that's involved,
Mm-hmm.
which involves some instantaneous significant tax deductions.
Sure. No, that makes sense. And I think for me, it's always like, okay, there's profit, there's expenses.
Mm-hmm.
If I'm going to go use that money for expenses, then I'm going to take my tax amount because
Mm-hmm.
obviously it's going to reduce my tax bill by that dollar amount. I could
Mm-hmm.
actually pull portions out of that money I've saved to pay for my equipment potentially if I need to.
Mm-hmm.
But just curious on that because I'm like, it's a simple equation. Here's my profit. This is
Yeah.
how much my tax bracket probably is. But also maybe you guys don't want them saving more than they need to because some people get
Well,
angry
people,
that
it can get emotional either way, right? If they get a big
yeah,
refund, they're like, wait a minute, I could have had this in my high yield savings account. So we,
exactly.
we really do try to keep it as close as we can given the constraints of this kind of three-dimensional moving target. What I have told doctors in the past, if we think about, let's say they've got an S corp, so on a reasonable W-2, we got someone holding through that W-2, but they should still be taking the majority of the money home via profit distribution.
Right.
Okay, have a look at last year's tax return. If you don't know how to find it, like let us know, right? Keep it simple, right? If it's 30%, just or 20, it's 28 points. Okay, round it to 30, right?
Mm-hmm.
What I think every business owner should do, okay, at the end of the month or quarter, however often you want to do it, you look at how much money has accumulated in the operating account. What is my chosen desired minimum cash reserve?
Mm-hmm.
And whatever has accumulated, distribute it.
Yep.
And let's say there's $20,000 extra in there, right? You know, and let's just say your effective rate's a third of that. Well, take 6 or 7 thousand and just put it in, like you said, Kiera, your savings bucket,
Mm-hmm.
and then save that. So then when your accountant says, hey, it's time for your Q3 payment, you tap that money. So I think that's just a simple thing, that a habit you could get into. For me personally, in our business, we always did that quarterly, and we take a distribution quarterly, and I would just lop off the top, put it away, and treat it like I had never had this, and I would send it right off to the government, and that way I wasn't playing catch up so much. Um, you know, in the accounting world, I don't quite have the volatility that dentists have, but it's that habit pattern, it's that discipline
Mm-hmm.
of doing it.
Mm-hmm. Yeah. No, that's super helpful. And Morgan, this is why I love to talk about it because it's like, hey, how can I refine? As we were talking about on that leadership, how can I refine? How can I make this just a little bit better? How can I learn a little bit more of the nuggets? How can I be smarter on my prep work for me emotionally? Because some people are just fine. They'll just like I have a million buckets. I love my buckets. I love to know what this money's saved for. Like my financial advisor teases me, my CPA teases me. I'm okay with it because I'm like, sweet, I know how much money I've got here. I know what I can buy here. My
Mm-hmm.
husband loves like just one big fund, and I'm like, but then how do I know how much I can spend? Like, I don't want to overspend or underspend. So everyone's different. So thanks for just going through it. Thanks for the psychology
Mm-hmm.
of it, the tax planning pieces, how the leadership and profitability connect to each other. Morgan, you guys are such an incredible CPA firm. I love that you're specifically only dentists.
Mm-hmm.
I tried to have you guys work with me, and you said no, I'm not a dentist. So I love that you are so niche.
We're very
Um,
disciplined.
it was great. I loved it. But if people are curious, how do they work with you? What are kind of the broad services that people could see working with you guys that
Yeah.
you guys do and how they can connect with you?
So our mission has always been and will continue to be supporting doctors by providing them the monthly accounting for their practice, providing practice profitability analysis reports, and specific advising and tax planning, just for doctors. If you want to check us out, it is eagdentaladvisors.com is our website. Or just email me, reach out to me, morgan.hamon@eisneramper.com. My business partner, Courtney, and I, we do all initial consultations personally. It's always been that way. I love to meet new doctors, learn about their situation, tell them about what we do, see if it could be a good fit. But that's how folks could go out and find us.
Awesome. Well, guys, we have a lot of clients that work with Morgan. I think he's incredible. I love what you guys are doing. Morgan, it was always a fun time. Thanks for kicking it off with Top Gun, ending with like tax strategy. Thanks for sharing some of the tips. But truly super honored to work with you and love what you guys are doing for dentists out there.
Kiera, I always enjoy our visits and look forward to each one. So I appreciate you having me. I really enjoyed it.
Of course. And for all of you listening, thank you for listening. And I'll catch you next time on the Dental A Team podcast.